Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. It's great to be back with you all. My name is Zach. Most of you are likely familiar with me by now, but for those that might be joining us for the first time or new, welcome. It's great to have you on board with us. Per usual, we have to go over some housekeeping details about the session, and then I will introduce Mr. Rob Roy, who we're all here for. So first and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Please feel free to take a screenshot of it now if you like, or feel free to read it in detail at your leisure on our website, as it's always there. That's the main point to take away from. All right, so I'm just going to leave that slide up there for review for when we get to the Q&A portion of the session. But overall, that covers off the housekeeping details. The market had a decent sized sell-off today, curiously rather, on the heels of some poor economic news regarding the ISM and durable goods. Wouldn't that be viewed as a positive as far as rate cuts? Although Powell is testifying in front of Congress tomorrow, so looking forward to hearing what Rob has to say about all that. Of course, very excited to interact with you all. So at this moment in time, I'll introduce the man of the hour, who we're all here for, Mr. Rob Roy.
Hi, everyone. Welcome to TradeFinder Live. What did that choke you up today's market move there, Zach?
It did, yeah. It apparently
Cracking
still
the
is.
voice there. Yeah. We didn't have too many sell-off days, but I'll show you a chart of the market, and you'll be able to see clearly how the market moved today. If you've been under a rock and aren't aware of what happened today, there's the move to the downside. But as you can see, still well within the trend line. A couple interesting things that Zach mentioned there. We did have a poor ISM Services report. Now, the ISM does manufacturing and services, and the services sector goes towards employment. That's the one that's been strong. We talked last week. The number was a bit weaker, but stayed above 50. This time it dropped below 50. What's key about that is the level of 50. Above 50 indicates growth. Below 50 indicates contraction. So is that the first sign of recession? As you know, I've been in the camp that we're going to have some sort of a mild recession all along. I haven't been part of this soft landing scenario, but I could be wrong. I'm wrong a lot, but that's just been my viewpoint. And then the durable goods, which are goods that are expected to last 3 years or more, was weak as well. So poor economic data. And as Zach mentioned, you would think, okay, well, that's what we need to get the Fed thinking about rate cuts, because as long as the economy stays good, well, why would they cut rates? Why wouldn't they just stay where they are, sit on their hands, as we talked about last week? And I think that that's probably a likely scenario unless the data starts to get weak. So you'd think that that would be something positive, but we do have Powell testifying in front of Congress tomorrow. It used to be called the Humphrey Hawkins testimony, named after the people that created it. It was a legislation that required, and I say that in jest, the Federal Reserve to testify in front of Congress twice a year, every 6 months. And I say that like that because Congress can't force the Fed to do anything. But the Fed graciously would do that. And then the legislation expired a number of years ago, but the Federal Reserve has continued to make their testimony in front of Congress. And that's what's going on tomorrow. So is that why the market sold off? Worried about what Powell might say, trying to get in front of it. The last time we had a big down day was in front of the Fed meeting. So that could be just another excuse to take profits. The market doesn't go up every single day anyway, so we get these corrections. But as you can see on the chart, no harm, no foul. If we put the moving averages on, you can see that we still close right on the 10-day moving average. Now, if we have follow through to the downside tomorrow, then we can start talking about a potential correction, whether or not it's large or not. Today was just 1%, so it's no big deal in the grand scheme of things. But it gets people's attentions when they're used to the market going up, and then you have these big sell-off days. So a little bit of a gap down, but still on the trend line, and no threat yet of starting the wave four. But if Powell comes out extremely hawkish, like we're not cutting rates this year, emphatically like that, I think that could that could be a problem for the market. I don't expect him to say that. I expect him to continue with his mantra that they're data driven. They'll watch things. They don't have any plans for rate cuts, but they're going to watch and see how things go. Interesting also is when we look at the 10-year on rates, we had too much to talk about, so we didn't get to Led Zeppelin on this intro of the song remains the same. Not today. Rates went down and the market went down. What we were talking about before is normally when rates were down, the market was up and vice versa. They were moving inversely, but today they both went to the downside. So we had a movement down in rates and a movement down in the market. So I really think that's just likely Powell related, but we'll find out tomorrow. We'll know by the close of trade tomorrow. If we look at the moving averages, you can see that we did close below all the three primary moving averages that I look at, the 10, 30, and 50. Of course, you look at the 200 when you're dealing with equities, but the 50-day moving average having a break below that is pretty interesting. So I mentioned that I wasn't sure what could propel rates down all the way to where this wave 5 tap projection is. But anything is possible. And by the way, if you're not familiar with the software, if you're new joining us, exciting news, the new live version. This is called the legacy version because they have a new live version with live Elliott Wave that's in the beta form, as I said. And you can go to the website, hub.com, hubb.com, and register and use it for free. I think you'll find it really exciting with all the features that have been added to it. So the folks at Hub are doing their best not to repeat Microsoft's just send out new software and let all the people figure out where the bugs are and issue patches. Obviously, when you create new software, there's going to be issues here and there, but they're trying to get as many of them out in beta as we can. So more people that grab it, the better. So go there and get yourself a copy of it. So it's web-based now, so you don't have to download anything on your computer. It's awesome stuff. So anyway, interesting on rates moving below the major moving averages. So back to what could get it down to that 5 projection. It would take a lot more, I think, poor economic data like we had today to get it down that far. For the Fed to cut that much, that fast, would have to be really, really bad. Just the sky is falling type stuff. I just don't see that happening. I think we're going to find our footing somewhere around 4%, possibly even down here around 3.9, testing that wave 3 low from back in December. But that's just speculation, and the market's going to tell us, and the market's going to do what the market's going to do. When we take a look at the VIX, you can see we got a little bit of a tick up today in the VIX, as you would expect, but maybe not as high as you would have thought. It was a decent sell-off until the very end of the day when we had a little bounce higher right before the close, but most of the day was in the red and continued to get worse as the day went on. But when we take a look at this bounce here, just hit 15 on the high and backed off. We closed at 1446, so that's not that high. Closed this gap, interestingly enough, but still a little bit of room to the downside if the market wants to turn around and resume the rally after Powell's testimony gets passes tomorrow, if that has anything to do with what was occurring in the market today. As far as the dollar, staying surprisingly just tranquil. Sitting right here at 104. It's been that way for over a month now, as you can see. And you just wonder at what point in time does the debt, I read this over the weekend, which I thought was kind of ominous, that the U.S. is going $1 trillion further into debt every 100 days now. So the speed of going into debt is accelerating. So $1 trillion every 100 days. That's a lot, but so far it hasn't affected global interest in the dollar. People still buy it, and it's able to hang in there right in the sweet spot, as we've been talking. Off of the low down at 96 would concern me, and getting back up here to the highs would concern me as well. But with future rate cuts on the horizon, I'd be real surprised to see us test those highs. But hey, if things get really bad globally somewhere, other than where they're already bad, maybe that could put a bid back into the dollar. But for now, it just seemed to be happy right here at 104, and 104 was a point of support resistance even before this last month. As you can see, we kind of bounced down from it a little bit in August, tested it here in November, broke it, came back, retested it, broke down, and then came back up, and we've been there ever since. So surprises me, but that's people are buying the dollar, still wanting to put their money there. One thing that has been going a bit crazy, we'll go to Bitcoin before we go to the rest of the markets. They're all going to look pretty similar. And even Bitcoin kind of did. It was blasting off, got up to 69,000 and then back down. We came and we're testing 62 and change again, but we got a little bit ahead of ourselves here. You can see from the high where the separation, pardon me, is from the 10-day moving average. So big gap there. And Bitcoin did need to rest a little bit. Even Bitcoin is susceptible to the rule, Zach, of what goes vertically up comes vertically back down.
Vertically back
or
down.
likely, yep, likely does anyway. So just wanted to show that with you. But Bitcoin's been on a tear, and as you've heard me saying numerous times, you're probably already aware anyway, the halving is April 18th, and the expectations are that it goes up into that. But some of the forecasts I saw were 70,000 before it. Gosh, we basically are already there. So maybe it does need to cool off a little bit here before making that final push into April. Let's get back to the U.S. markets. Looking at the DIA, as I said, these charts are all going to look the same. Maybe not quite as severe here on the DIA, but the move to the upside hasn't been quite as strong. Not bad, though. Still in a 45-degree angle. And we talked about this numerous times as well. We did have a little bit more of a vertical move towards the end of the year. I think that was some rotation by the big investment firms, thinking that maybe we were going to see this poor economic data a bit sooner, and they wanted to be in the larger companies. And it hadn't happened until today was really the first time we've shown something of contraction on that ISM services number. It's been weakening, but not actually to the point of contraction. Again, I'm surprised that none of this has affected the dollar more than it has. And then the Qs. Let's talk about the Qs, because we've been waiting to see as the Qs continue to move up and this 5 just kept hopping over to the new highs, if that 5 was ever going to relabel. Remember, we are in a wave 3 in the S&P, and we're in a wave 3 in the Dow. But the Qs have been the outlier in a wave 5. And they usually come back into concert with each other. This discombobulation, as I call it, can happen for periods of time, but normally they're back in line. So which is right? Are the Qs going to relabel to a 3? You would think that if rates continue to come down, that's possible with the big tech stocks that could continue their run. Or have the Qs had it right all along? And a question was asked last week in the U.S. market update on the EWO channel, the Elliott Wave options channel on YouTube. Could a 3 relabel to a 5? And yes, that can happen. More often, you have a 5 relabeled to a 3, but if we do start to get a decent correction, a 3 could relabel to a 5. But you look through here and you say, well, where's a correction big enough to create a 4? I don't really see it, but there are possibilities of it. I just think it's slim that occurs. But I just wanted to highlight that because at some point in time, they're going to have the same patterns, or at least similar. They don't have to be the exact same. And the Russell tells us that it looks different than all the other patterns, where you can look at and see that here we are right there at that previous wave 3 high. We took it out, but couldn't close up there. So the 5 moved over on the high of the day, but we weren't able to close above that wave 3 high. But we still have a large ascending triangle. And as I've talked about so many times, an ascending triangle does not mean that it's going to break to the upside. It means it's going to break out. Any triangle, ascending, symmetrical, descending, can break either direction, regardless of what you read out there. I've done the research, have the data to show it. Triangles are triangles. You get breakouts, but you never know which direction. If you get it right, it was a good guess. But we don't know. And so here we are right in the point. Not really a doji there, but close, right here in the point of the triangle. So we're likely going to see some sort of a break out of the Russell here in the very near future, as we are right there again at those wave 3 highs. And it's a decent type of a triangle here. You can see the lows down at 190, 205. So, 15-point break is pretty significant out of the Russell. So that's what we'll be looking for to see how that's going to go. And I did want to show, this question was asked this past weekend on the U.S. market update. What about a weekly chart of the S&P? Remember back when we were talking about how Jeffrey Gundlach said, oh, we're double topping. And I mentioned that he's somebody that I watch for the bond market, not so much on the equity market. And that was back here, right in this area, right in here at the beginning of the year, where we were up where those highs were from the end of 2021. But clearly we've just rocketed above that with no decent size correction whatsoever on the weekly chart. And that was the question. This is a little vertical. I don't think it's vertical enough for the what comes straight up comes straight back down. I don't think that scenario plays out. Is it due for a correction? Probably, because there's the 10-day moving average. We're a little separation from it. For a weekly chart, that's a decent amount. On a daily chart, you'd say that's not that separated. But on a weekly chart, it kind of is. So maybe we finish with a down week and come back a little bit. But the market could move either direction. But I did think it was interesting to look at the weekly chart, which we don't do every week, but to do it periodically, I think makes a whole lot of sense. All right, so that gets us through the major markets. Let's take a look at our case study considerations. Let's go ahead and do the international markets real quick. I was going to do case studies first, but we'll look at there's been some questions about international markets, and here we are on the EWA. We look at the XJO on Thursday nights during our insiders meeting, which is for our subscribers only at ewotrader.com. You can see we're right here at this level of 24 and an ascending triangle here as well. And somebody said that my trend lines are sloppy. Welcome all comments on the U.S. market update, by the way. And we don't all agree. That's what makes markets. If everybody felt the same way, if everybody agreed, then there'd be no market. You have to have both sides. And I never get upset about opposing views or criticism for that matter. And for me, drawing trend lines is not an exact science. You're just trying to get a general picture, a general viewpoint of the pattern. So whether or not you agree that the trend line's there or here or wherever you want to put it, it's just, if you want to just connect the lows, it doesn't really matter that much in my viewpoint. You just want to see what the general pattern is. And the Aussie market looks like it wants to break out in the not too distant future. Up north in Canada, gosh, there's been a lot of talk about China lately in there. I guess you saw the news on Tesla, where they're not going to be shipping as many cars to China. So Tesla's in danger land as it breaks below 200. We said it needed to hold there. Also an ascending triangle here on the EWC, and there's the pattern there, some sort of a break. Once again, had a wave 5 here. We did barely close above that wave 3 high back here on the 1st of March, but no follow through. So even though it was able to manage to close above it, we're right back down to that support line. So 37 has been key for quite some time. Going back to the end of last year on the EWC, it's just been kind of treading water here. You could almost say that I don't really think that's a triangle. That's just a trading range between 36 and 37. I wouldn't argue with that viewpoint either. They're both showing consolidation And when you have lengthy consolidation, normally it leads to a breakout. So whether you view that as a channel or a triangle, still lots of consolidation going on there. The market that wasn't consolidating is Germany, the EWG, which was just rocketing up, and so far has done a good job of consolidating that big run without giving much back. We do have gaps here, but you always have these gaps. Don't pay attention to those on these ETFs because it matters what happens overnight. So you get lots of gaps. So the theory of gaps getting filled doesn't really hold on the ETFs, like when we're talking about equities or the U.S. market. But big gap up, gap right through the resistance there at 30, the previous wave 3 high from December. And we've gone up, hit that 61.8% fib level, just smashed our head against it. And we've consolidated and still above the 10-day moving average. So the German market still looks really good. The INDA, which had been charging for quite some time, regained itself. We were wondering during the insiders meeting with this little pullback here, is that it? Is it going to rest a bit? No, just a day or two. Back above the 10-day moving average, ticked down a little bit today, but just continues to power higher. The INDA and the Nifty have been the place to be. Germany has now joined the party internationally. So if you're looking for places to go on the international side, those are two pretty good places. I think maybe Australia and Canada will join them, depending on which way those triangles break out. But pretty interesting. All right, we have some news. Zach, if you would put that slide up. Before we move into our case study considerations, I had briefly mentioned this in the past, and I kind of jumped the gun a little bit, but it really is happening this time. As you know, we had y'all vote. We are going to be moving TradeFinder to during market hours. And that's going to take effect next Tuesday. So next Tuesday, we will be on at 1 p.m. Eastern time. We gave you guys a vote, and that's the time that you picked. That gets us into the day, so we'll have an idea of what's gone on. Monday, we do EWO Trader Live on Mondays. If you haven't signed up for that, join us every Monday morning at 11 a.m. Kind of gives us an outlook of what to expect for the week kind of thing. And what the open is on Monday. And then Tuesday, we'll be following that up. So TradeFinder is going to be during market hours, starting next week, 1 p.m. Eastern time. We hope you'll join us. I know for our international viewers, that may not be quite as ideal, but remember that it's recorded. You can watch the recording at your leisure. And I do feel like this is a change that makes more sense to do a show like this during market hours and talk more real time what's going on, especially when we have the new version, the new live version coming out of the software. So it's all going to tie in together really, really well. I'm not saying the new software is going to be fully released next week. That's not what I meant, but we're making the transition to really get an idea of the feel of the markets during the actual trading, and we can show patterns as they're occurring type of thing. So really excited about it, and I hope you'll join us. All right, for our case study considerations, we just have two that are left. We closed out two last week. We had our GEN that we had done back on the 6th of February. And
excuse me, sorry, quick reminder to take the screen back over.
Yeah.
Don't know what's going on in my throat tonight. Hopefully,
just one down day.
We get to Q&A.
Lose your mind. I mean, it's just all choked up. We're one down day. I'm just teasing.
Just too much to handle.
Yeah, as you know. So we were looking for a move to 220, and we were getting there. We got on the 16th as high as 211, and then pulled back a bit. As we mentioned last week, so not much has changed from this week to from last week to this week. He tried to say, as long as we stay above this wave 3 high and we're consolidating nicely there, we could get that blast off effect that talk about from the Space Coast. You can see the two bookends back behind me. That's in honor of my dad that had a lot to do with the guidance program on the shuttle, the space shuttle. Living near the Space Coast, if a stock or security consolidates sideways, oftentimes you get a breakout move. And it doesn't have to be to the upside, as you can see here, where we went sideways and broke lower. But when you consolidate sideways like that, usually it's not just kind of taken off in a 45-degree angle. Usually it really moves more vertically on the breakout. Perhaps it goes to the upside then and makes it to 220. Or if it breaks below this wave 3 high, that would be a sign you're out. You take that one off and move on. Look for greener pastures, so to speak. And then last week we looked at Globe Life. I do feel like this could be a defensive place to be if we are going to have some more follow through to the downside in the markets. Rotation hasn't occurred yet, but if we start to see a number of down days in a row, you'll start to see money finding more defensive sectors to go into. Life insurance could be one of them. So right now we're just kind of status quo, hanging around the lower end of this tap box. Once again, same story here. As long as we stay above this wave 3 level here, I think you stay long this. If it breaks below that, that's a different story. Then that wave 5 is probably done. That's such a weird bar, though. I have to go back and look at that data and see if that was actually trading or if that was just a bad quote that day. But staying above 125 is the key for Globe Life. So you stay long as you stay above there. If it breaks below that level, then you take that one off as well. Just to give you an idea of what we do on our website at ewotrader.com, we send out alerts. We talk about case study considerations here at TradeFinder. We identify, a possibility, and then you're on your own as to how you trade it, how you manage it, etc. But our alert service at ewotrader.com, we send out alerts for entries, any adjustments, and exits. And so taking a look here, we had this alert on OKE. Now, last week we had that great one on MicroStrategy. And it's fun when you get those big, quick moves like that, but they don't happen all the time. This is more kind of the norm on things. You can see a nice 40% return in 10 days. Never really got too far below the zero line. Often you see some red when you trade long options because of time decay before the stock makes its move. Now this one took a while and then took off. And here's the entry alert. So this is what it looks like. You see what the option was. And then you also get a chart with some commentary behind the chart. And you can see that we are, we're in a wave 3 with a zigzag pattern, my favorite directional pattern to trade. I'm sure everybody's aware of that by now. And then the exit occurred as we hit our target dead on the nose. Look at that move. Now that one took 10 days, wasn't quite as fast as MicroStrategy, but that's pretty fun too. So really wasn't too much give back. I think one day, and then off we went. We gapped up and hit the profit target. Now this could continue higher because it's still in a wave 3. We'll continue to watch it. It did go up again the next day. But when you hit 100% extension and you haven't really had much of a pullback on that move, you want to go ahead and take that IV infusion on a gap up like that and take the gains. So just that's a classic trade. That's what they look like oftentimes within our AI-based impulse strategy. That's our directional strategy that's infused with AI to aid Elliott Wave in the accuracy and utilizes not only my indicators, but hundreds more that the AI utilizes. So wanted to show you that, just kind of a more reasonable result there rather than the big winners like we had last week with MicroStrategy. All right, so let's take a look now and see if we can find a case study consideration for tonight before we open things up with a down day like this. Be interested to see. As you know, I don't look at these ahead of time. I think it makes more sense to do it together. It's certainly more educational, I think, because you hear the thought process as we go through it rather than cherry picking something and already having it loaded and ready to go. So we discuss it together. And so on the impulse search, and by the way, if you have this software, again, hubb.com, and you're an EWO Trader subscriber, you get these three searches, which are mine. So that's where the AI came from. And I'm told that not when it first launches, but sometime this year, you're going to be able to get the AI signals as well. Now, we don't get the intellectual property. They don't give that to us either. They keep a wraps on that, but we'll get the signals, and you'll be able to get those just like I do. No brainer to go sign up for the software, honestly. All right, so we have two results here. LINDE, the symbol LIN, and Church and Dwight. So we'll take a look at these two and see. Well, LIN certainly didn't fall with the market today. Let's add the Elliott Wave on. Wave 3, gosh, we might have a good one right off the bat here. Looking at that DMI, I'll take everything else off so that we get a better view. Not that overbought from the 10-day moving average. We are getting, it looks like maybe a little long in the tooth on this move because the ADX is getting up towards 40. Still great separation between the two directional indicators. The positives going up nicely, the negatives going down nicely. So perhaps we have enough room left to get up to this tap box target. And for those of you not real familiar with this software or Elliott Wave, I know it confuses people at times, but I say it as often as I can. When you see these projections, that's what they are. They're projections. This is not telling you the wave 4 is underway. This is saying if the wave 4 were to begin today, this is where you could expect it to find support and then perhaps bounce up towards the wave 5. Now, the algorithm likes this price level up here, and it's pretty close to 500, and we're at 460 now. We're getting in that area. We're not quite in the tractor beam yet. I think we got to go a little higher before the whole tractor beam effect takes hold and pulls it up to that big round number. But if it goes much higher, then we could easily see 500 out of this stock. Those big round numbers just draw stocks to them. But we need to see a little more movement first before that becomes an issue. But the algorithm likes the price between 480 and 500. And when you're in a strong wave 3, the wave 3 can go to that target. Those 4 and 5 projections will move based on how far the 3 goes. So at some point in time, obviously it'd be sooner rather than later if it's the wave 3 that gets up there, or it could be a little while we go through a wave 4 pullback before the 5 extension. So that looks pretty darn good there. We'll have to see if CHD can compete with that. That one may be our case study for this week. Looking here at CHD, you're going to see that DMI is not quite as nicely set up as the one on LIN is, and this is in a wave 5. So we are right here against resistance. Now the DMI is trying to reset itself. See how it came down and now it's curling back up. I prefer it when the ADX makes it all the way down under 20 and curls back up, but that's pretty close. So I'm not going to get that picky that it didn't quite make it to 20. We are starting to get good separation again from the two directional indicators, and we had a nice close here above that wave 5 high. We also have a zigzag here, I think, that is going to qualify. Let's see. It does. And, does it look quite as good as LIN? Not quite as good, but that's a pretty darn close second place here, I think. The only thing here I would say that would move LIN over this one is we need a follow-through day. We had the break and the close up here today. We haven't actually traded above the wave 5 high yet. I put a lot of faith in these zigzags, and with that 50% B wave correction there, that likely means a 100% extension, not just the 61.8, but that would be the first point of resistance. But I would put this on a watch list and say that if we got a follow-through day tomorrow, so if CHD were to trade and close higher tomorrow, then that would be something I would really consider. So tomorrow will be the 6th. So I just feel like that one's awfully tempting. It's an aggressive move to go in now. I usually give both conservative and aggressive viewpoints because everybody has different risk tolerances. You know what your own is, and you have to trade the way your risk tolerances guide you and what you're comfortable with. So if you're very aggressive, you could take a shot at it tomorrow, unless obviously it opens down significantly, and that would be back below this 101 level. If it closed or was trading below 101, then I wouldn't even be aggressively going after it. But as long as it's staying above there, you could take a shot at it. If you want to be more conservative, you'd wait, let tomorrow close, or at least wait till almost the close. If it seems that we are going to get a higher close tomorrow, that would qualify as a follow-through day. We're not far away from the 10-day moving average. So that one's a really good one to keep an eye on. I just think it needs one more day. So we're going to go with LIN as our case study consideration for tonight. So for 3-5, it's going to be LIN. And we're just going to go to the lower end at 480. And note that if it got there, you could take a look at it and see if it looks like it wants to continue up to that 500 level. And how would you know? Well, I look at the DMI, the CCI, CMF. Those are the three primary indicators, along with the moving averages, et cetera, volume, all those general things that we talk about. But I like to look at those indicators to see if it's still showing a lot of strength and that a continued move is likely. So it could bump its head at 480, or it could just run to 500, because 480 is in the tractor beam. That's where it could get to the point where it could literally draw it up to it. So really, Zach, there's not a whole lot else to talk about tonight. The markets were all just kind of in concert. It was a down day across the board. We could have a wild day tomorrow. And what I mean by that is intraday swings. I don't necessarily mean that we could have a massive up day or a massive down day. Those are both possibilities. But intraday, when Powell testifies like this, the market tends to move on every comment he makes. They'll get grilled by Congress and they'll act like they're, questioning them and all this kind of stuff. And it's all theater. It's all theater. I'm sure Powell hates doing it. But they've agreed to do it just to kind of keep Congress off their back, I think. Every time he makes some sort of a comment, whether it's viewed as leaning towards rate cuts or leaning towards not doing anything, you could see intraday swings. So I tend to kind of watch days like that. If a good trade comes along, then, we'll take advantage of it. But other than that, those are days that I tend to just kind of sit back and watch the show, so to speak, as how the market moves. Wouldn't it be fun if this was a live TradeFinder tomorrow to watch the intraday? We'll get a chance to do that kind of stuff with TradeFinder being live starting next week. So not live, but during live market hours. We're live tonight. But anyway, with that, Zach, take a few extra questions tonight if there are any.
Oh yeah, there's always tons of great questions. Hopefully my voice can hold up through it. Didn't have any issues until just now, right before our webinar, so convenient timing. But let's before we get into the Q&A, I just wanted to add to your last point there. Thanks for reminding everyone that it will be at 1 p.m. starting next Tuesday, March 12th. So we look forward to seeing you all then. Just wanted to give one more vocal reminder on that. And Rob, I just had to confirm with you real quick. If I heard that right, tomorrow is going to be a wild day. So that means it's neither fascinating nor interesting. Is that correct?
It will be both interesting and fascinating, but trying to stay away from those words a little bit. I mean, people even picking that up on the YouTube comments as well.
All right,
So
don't let me
people are
digress
listening.
too much.
We
Let's
got
get
Katie
into some
Barr at the
questions
door,
here.
even on CNBC. I'm sorry, go ahead.
No, sorry. I was just saying, don't let me goofing off digress us here when we get into some questions.
No worries. It's flattering when we know people are listening and making comments like that. Anyway, go ahead. Let's do
All
some
right. All right.
questions.
So a question here from Emmanuel. Can you please have Rob view a firm and let me know if he now thinks it has dropped under key technical support? Does he think it will continue to drop under 30? Emmanuel's thinking it's a good short to 28 area.
Yeah, we've been looking at this one every week. I don't know if it's a manual that's really on this one, but we talked about we needed to see it break below 40, which it did, and then it kind of played around underneath there. And I would think that if we start to see weaker economic news, as we did today, of course, the whole market was down, but we did find a couple stocks that were up, and a firm did go lower. And I do think that this goes down. And part of that is because this was such a vertical move to the upside. Part of it is because their business model isn't great in a recession. When the Fed is content or intent, I should say, on weakening the job market a bit. So yeah, I do think that this looks like a short down here. The only time once we broke below 40, the only concern was if we got back above 40, then I would have said no, it's not looking to the downside any further, but it didn't do that. Never even traded above 40. So yeah, I still think this one goes lower. I know it's in a 5-wave to the upside pattern, but we look at both fundamentals and technicals, put a lot of weight in technicals, but this one, I think the fundamental story is gonna weigh it out. So was it Klarna? Is that the other one? I mean, that one did come out
Barnum, yeah.
with decent numbers, and that gave it a little bit of a bid, but even that couldn't push it back above 40. So, yeah, I think moving down towards that 28 to 30 area is highly likely.
Alrighty, very well. Let's have some fun and go over to Tesla.
Yeah, I mentioned it a little bit earlier, and that was bad news. And you probably saw that with these moves down the past 2 days, Jeff Bezos has taken back the mantle of the world's richest man away from Elon. But we said that it needed to hold 200. We were talking about this last week, even talking about it Thursday night during our insiders meeting, that as long as it could hold above 200, it had a chance to blast off from there. But it couldn't hold it. It broke below it, and that's follow through today. It's a tiny bit oversold with this gap, so it'd be tough to go short today or tomorrow, but it's got to hold 180 now. So it may just stay in this range between 180 and 200. I don't know. China's a big market, and we know that the Chinese are being very aggressive on their own EVs, and that's clearly hurting Tesla sales there. And so that's going to affect the bottom line. But if we can't hold 180, then looks like 160 is next. And I think that if we don't hold 180, I think 160 happens. And you can see that we're in a 5-wave to the downside pattern now on Tesla. So that's not a positive for it either. And breaking below that 200 level was key. I think even mentioned that we would test 180 in a very short period of time if we didn't hold 200. I think I actually said those words. And there you go. It only took 2 days to get there. Now we find out, can it hold 180? And if it doesn't, and there's some support here, it's not a ton, but there's some support. But if it can't hold 180, then I think 160 happens. And then you start looking at this tap box down here. So doesn't look, other than perhaps some sort of a quick bounce trade, maybe to fill this gap or maybe to come back towards the 10-day moving average, but it could just as easily continue lower from here if it breaks below 180. And then at some point in time, especially if the market is a little bit weaker, some of the big boys may start unloading some Tesla and not want to risk losing long-term gains there. So it's in a danger zone now, Tesla is for sure.
Alrighty, let's go over to UNG for Dan. Would like to hear Rob's take on UNG relabeling today.
Well, the thing here is that we still don't have split adjusted data from Reuters, which is where the data comes from. Refinitiv now, I think, is the name they changed their name to. Um, Largest data supplier out there. They take their time. Sometimes they're right on top of split adjustments. Sometimes they take their time. So it's really hard to look at this from an Elliott Wave standpoint. So we had a reverse split here, and that's what these kind of things do when they get really low like that. And then it's held this area here where that is split adjusted. I'd have to figure that out. But the bounce back to the upside is nice. We did finally have a little bit of a winter storm, but it's been a pretty mild winter across the country, and that's been a problem for natural gas. And we just got down to the point where we had need for a little bit of a bounce with such a move lower like that. So can it continue this move? Perhaps. Perhaps it can gain and move back up here. But I don't know where the catalyst would be for it to move that high. We're almost out of winter. Spring's right around the corner here. And if it even bounced up to this area here where there's some resistance, I would be surprised, but it might get that high. But does it go much higher than that? This time of the year would be unusual, but hey, anything's possible. So I think it could continue to bounce up to that resistance level, and then we'll have to wait and see if it has enough energy. That's bad to get above that level there and continue higher above 20 there.
Yeah, I couldn't even give you some sympathy laughs on that one. But however, Emmanuel did say thank you for your prior analysis. So there you go.
So
We're down.
yeah, so I think there's a possibility of a little follow through here, but I, I don't know. We'll have to see if it can break above there. I was just babbling now. Go ahead, Zach.
No worries. Let's go over to SoFi.
Well, this is going to be an interesting one to look at as well. And, the whole economic thing isn't going to help them either. And you can see that hung in there okay on its earnings report. We're now down into an area of support at 7, and it's got to hold there, I think. Go back and look. Yeah, see, I thought I remembered that this was pretty vertical here. That's danger, danger. Will Robinson, big time right there. Otherwise, you're back down at 5 again. Now, they came in and supported it last time we got down to 5, and we've talked about the importance of the $5 and $10 level so many times from an institutional standpoint. They supported it last time and came in and bought more when it got down there. Will they do it again if we get down there? We're oversold after today's move right now from the 10-day moving average. So perhaps we get a little bit of support here at 7. The key is going to be, can it hold it? If it goes sideways for a few days, can it hold 7? Maybe you get a little bit of a reflex bounce, but a break below 7, and I think you see 5 on SoFi. But it's oversold right now, so short-term bounce could happen.
Alrighty, very well. We got a question from Alan here on YouTube. This is going back to the triple Qs. The third wave looks shorter than the fifth wave. Is the fifth wave impulse subject to relabel as a third wave? To be relabeled as a third wave?
Yeah, and that's what we were talking about earlier when we were talking about the markets. Remember now that wave 3 is always the strongest wave, but it doesn't have to be the longest. And so, as you point out, the wave 5 here is about the same, but the wave 5 can be longer than 3. It's just not as strong. But that could most certainly relabel to a 3. I'm just surprised that it didn't do it here on the 1st of March. when we had this big up day. I thought that might be enough to get it done, but it hasn't yet. So, perhaps that still happens. We look at the Elliott Wave long count on this, see what that says. Yeah, that's showing a 5 as well. So it's still in a way 5. But could it relabel to answer the question? Yes, it could relabel to a 3 and join the other markets. I've been expecting that. It just hasn't happened. So it
Thanks,
could
Rob.
also be right.
Let's go on to a question from SP here. Your thoughts on DKNG with a double top. How would you use the DMI and ADX here?
Well, the problem with DraftKings and all the gambling stocks is this is a quiet time of the year. We do get some activity from March Madness, which could hold it up. Then it really gets quiet until we start up with the NFL again. But the key here is staying above 40 as far as how to look at the DMI. When you look at that, what we're looking for is what's the likelihood that it's going to hold the wave for? And you look at the DMI, and it's slightly, the ever so slightly bullish. We did get a tick down on the positive directional indicator, but that's going to happen to most stocks today with such a bad tape, as they say, in the market. But 40 is the key level here. As long as it stays above 40, I think you can stay long this stock. Maybe it gets one more shot during March Madness. On the roll tonight, Zach. But
Someone get them some butter.
the DMI, to answer the question, is showing just slightly bullish. And then if we look at the CCI, it's kind of neutral. If you are bullish, you do want to see this CCI come down, because when it gets too high, it means it's kind of temporarily out of gas. So it ran into resistance there at 45 from the previous wave 3 high. Couldn't break above it, but without such an ugly day today, maybe it does, maybe it doesn't. But at least that gives the CCI a chance to come down, reset a little bit, if we can turn and go higher. But I think you stay long here as long as it's above 40. But a break below that, and yeah, it's probably down to 35.
All right, we've got Renee from YouTube here with some positive feedback and a couple of symbols. She says they say you're awesome. First symbol of request is going to be costs, COST.
I appreciate the comment. Thank you. COST. Now, this is an area that you would expect is going to see a bid in a weakening economy. If we are weakening, which I think we are, I'm not saying the market's going to go down. I say I think the economy is weakening, and it depends on how long the Fed does take to get around to cutting rates. And Costco, Walmart's, stuff like that, Dollar Tree, all those stocks tend to catch a bid when the economy weakens a bit. Now, this one's been on one heck of a run on Costco. So let's see what the DMI is showing, if it's getting tired here, because that's in a very long wave 3. This is, I think I talked about this last week too, or maybe it was Thursday night. You don't see this very often, but this can occur with the ADX. Normally it kind of goes, in those lazy, like lazy river type moves where it goes up and rolls over and comes back down, then rolls back up. But there are times when you have a really strong move, and this kind of move here looks like institutional acquisitions here, acquiring the stock. So they're going through accumulation. And then when we look at the volume, you should see just good, steady, average volume. When they do that, they don't want the big spikes, because then that attracts people to it. They want to just quietly add to their position here, and that's what's been going on. And the fact that the ADX has stayed strong like this, up around 40, is telling you that's likely institutional buying. So the institutions are accumulating this stock. It doesn't mean it can't pull back, but when it just stays up here like this, that means that this entire move here has been equally strong. So as it's continued to go higher, it hasn't weakened. So you would think we would likely go a bit higher here and show some weakness before the stock rolls over and have some sort of, that not rolls over and falls down, but has some sort of a correction to it. So I would think that we see a little more upside here, at least until that ADX starts to show, okay, we're running out of steam here. And that normally occurs before you get a big move down in the stock. It might just be one down day, but usually there's a trigger there that causes that. But note how it's just stayed right above 40. It's never broken below it. So this is actually, great from talking about the DMI as an indicator. What we normally talk about with the DMI is this stuff here. When it breaks above 20 and it goes up and gets to 40, then you start to watch it. But every now and then you see this, and that's what it's telling you, that this move is not weakened as it's gone up. So with that, barring some real negativity in the market, and most stocks will eventually follow the market if we start to continue lower. Everything could change tomorrow. If Powell is the least bit dovish, if he says, yeah, we've talked about rate cuts, we don't have anything in plan yet, that might be enough to put a bid back under the market. But if he's real hawkish and saying, we're not even thinking about it, we may not do it this year, that could see some follow through to the downside. And eventually, even these kind of stocks will succumb to that. But for now, it looks really, really strong. That's a great chart. So good pick there.
Yeah, I
Second
echo
one.
that, and I was gonna say the context around it was that both the symbols seem very extended. The next one's gonna be LLY.
Yeah, Eli Lilly has been on a run, but also the same type of thing here. It's in a sector that's viewed as being defensive, and these are the kind of stocks that do well when the market gets softer. Now, it looks like, kind of what happened on the DIA before the end of the year, where it took off and went a little too vertical. But it went through a nice little consolidation here. We had a small, I'll move this trend line here up a little bit. But we had a nice little descending triangle and broke out from it. But is Eli Lilly done? The ADX is pretty high. Now, if the ADX breaks down below 40 and breaks down below that positive directional indicator, that's the signal that you normally see when, yeah, it's tired. And it needs likely a pullback, maybe even to come back and test this trend line, if not further back. But any sort of a pullback here, if we continue to show a weakening economy, it could keep a bid under Eli Lilly. And I was listening, here's fundamental stuff again. As you know, I keep CNBC on mute most of the time, but every now and then somebody comes on that I want to hear what they have to say. And they have a lot of drugs in the pipeline. And they also cited, if we want to stay in this sector here, Pfizer apparently has 80 drugs that are waiting on some sort of results from, the various stages that they go through, approvals. And here's one that has same sector, but the exact opposite chart of Eli Lilly. So if you feel like the big part of the move is over in Eli Lilly, but you like the healthcare sector, that could be something to take a look at longer term. One of our alert subscribers, Pankaj, who shows up on Thursday nights regularly and talks about ideas for leaps, long-term options. This is the kind of stock where you might do something along those lines. A year from now, I think Pfizer is likely a lot higher than where it is now, especially if we go into a little bit of a pullback. So it could play catch up here to Eli Lilly. Kind of Pfizer got really punished. They went so hard into all the COVID stuff, um, but they've since been spending a lot of money on R&D, and supposedly that's going to come to fruition. Anyway, I'm just passing on comments that I heard, not necessarily my viewpoint, but it is one of the things that normally happens when there's a sector that draws a bid in certain market conditions, and healthcare is defensive. If the market weakens, um, a lot of times money will look for, okay, we've had this strong move in some of these stocks. Which are the stocks that are good companies that haven't followed through yet, that have been left behind, and money rotates there. So one could make an argument that perhaps some money comes out of Eli Lilly and goes into Pfizer from market rotation along those lines, capital allocation rotations. But as far as the final comments on Eli Lilly, we just want to watch that ADX and see if it breaks below 40 and breaks below this positive directional indicator. If it does, then I would say, yeah, it probably needs to rest a bit. But it's consolidated pretty nicely so far.
Very well. All right. I see we are 2 minutes after the hour. So you tell me, Rob, as always, I'm happy to stay on as long as you like, but we got lots of talking to do this week. So you tell me.
Gosh, that was quick. We had 5 extra minutes. Let's just do two more real quick and then we'll wrap it up.
Two more? That sounds great. I do want to take a moment to remind everyone out there that's watching live to smash that like button for us. It goes a long way for the algorithm and channel, so we greatly appreciate it. And appreciate you all joining live, of course, and interacting. So I see we have a hand up. We unfortunately don't have time for voice questions in this session. However, we do encourage you to attend the insiders meeting. It's on Thursdays for paid subscribers only, where there's a 45-minute Q&A portion, and you can ask voice and Q&A questions. All right, so we'll wrap up the session with two symbols. First one is going to be AVGO for Young.
Good old Broadcom. Was one of my favorite stocks to trade a number of years ago. And it's just got a nice little zigzag, just zigging and zagging all the way up. And here you go again with that ADX going sideways. So accumulation occurring here as well. A little bit of FOMO here. This is what the guys don't like when they're going through acquisition or accumulation. They don't want to see these big spikes. They just want that slow, steady climb like you saw in Costco. But, it's got a couple places of support here. If it needs to come back down a little bit more, Zach, you transferred your voice over to me, I think. 1283, 1300, somewhere in there is support. It stayed above the 10-day moving average. You like that ADX continuing to go sideways. Again, as long as the market stays constructive, the market doesn't have to continue to go up for stocks like this to go higher. But if the market rolls over hard, then everything's going down. So obviously that's goes without saying that when we're looking at these, we're looking at what the chart is showing us right now. Granted, it could be totally different a week from now, but it got a little vertical, got ahead of itself, tested the 10-day moving average on the low today, could even go a little bit lower. But you want to see it stay in this corridor right in through here, somewhere in the 1250 to 1300 range. It still looks pretty strong.
Alrighty, I will pass through this last symbol. I'll just say that a quick reminder to everyone, again, just for one vocal reminder, one final one, we will be moving to 1 p.m. Standard Time, Eastern Standard Time, next Tuesday. So we look forward to seeing you all then. Last symbol for this evening will be from Puck on YouTube. Can you look at Path? Earnings are next week. Thanks, Rob. Thanks for another great session. It's been a pleasure as always. And thank you all for attending live.
Echo those sentiments, Zach. And, they mentioned the magic words in their last earnings report, or magic letters. And we'll see if they give some further commentary on what they're doing with AI. But the break today below that support right there at 23 is a little concerning. but we still have a little bit more support down here around the wave 4. This one would be a little tricky going into earnings, because it could explode just like this on its earnings report, or it could tank if it can't hold 21. It could be down at 15 or something. So this one's pretty tricky going into earnings. You can see the ADX is very low. It's a descending triangle, but it's not the classic formation that I usually like. But certainly lower highs, and then a lot of support there at 23. But again, that got broken today. On follow through, can we hold the wave 4? That's going to be the key here, because a break below this 21 level here is going to be pretty ugly for it. So I think the bottom line here is I think this one makes a pretty significant move based on this pattern on earnings with an ADX that low, a lot of consolidation around 23. It could be like a strangle candidate or something. If it's not too late, I don't know how much IV has been pumped into the options. I'd have to look at them, but something along those lines, I think makes a lot of sense on a stock like this, based on where it's sitting. It's sitting in such a major area of support. So it either blasts off from it or breaks below it and falls. But I think you'll see a big move on earnings here. That's going to be pretty interesting to watch as well. Is it before Tuesday? When's the earnings report next week? Yeah, it's not bringing it up, but let's look at that one. Let's look at that one again next week. I'm gonna make a note here for next week. It's a good one to finish on here. See what that looks like. All right, so echoing Zach's comments, thanks everybody. Excited to be coming to you during market hours next week. Look forward to having everybody join us at 1 p.m. Thanks as always for your time. We know how valuable it is, and we try to make this an educational and informative use of your time. Thanks so much. Have a great rest of your week. Look forward